It's your patriotic duty to put your money into the U.S. stock market.
Welcome to the Future of Money, where we take a rather red-pilled look at economics around the world and take a different view from that which you no doubt get fed up reading in the mainstream media. Today we're going to look at the US stock market and how much further can it climb. Well, it's certainly climbed in the last 11 years. It's been in an 11-year bull run, as we'll see in this chart here. This is comparing the US stock market to the US GDP, and you'll note that on two occasions prior to the current bull run, it outperformed GDP. It was worth more than the GDP, and on both occasions reverted to mean again. So these were the two previous recessions. This time round, the bull run has just ignored the GDP line and it's just shot right through it, and it's continuing upwards. And if you talk to anyone who's invested in the US stock market, they believe there's a long way to go before any kind of pullback. Part of me agrees with them in a way, because there is so much riding on this stock market now that it's almost too big to fail. Now that sounds crazy, because we're used to economic cycles where you're in a bull market, things are going well, and then businesses get complacent, services are no longer needed. There's always going to be businesses that fail, and then the stock prices of those businesses go down. And sometimes that can cause a knock-on effect. There can be sort of macro influences that cause recessions too. And these are not necessarily bad things overall. They create a fire that burns the dead wood, and out of this fire, there's a kind of new economy that sprouts up from it. But this time round, it's like the US stock market's just too big to fail. The Fed are protecting it, no doubt. The Fed intervenes with a rate cut. That seems to be their main mechanism here, and the market is loving rate cuts. The Fed back in December 2018 said they would hike rates through 2019, and the market hated that, and it tanked almost 20%. And of course the Fed did a 180 and changed their mind, and they did 3 rate cuts through 2019, which they indicated they would do that early in 2019, and the market has priced that in through the year. The market's too big to fail, but it will fail eventually. They always have to fail. And fail, I mean, they'll go into recession and it will revert to fair value. It will revert to below mean and then back to mean and maybe above mean in a future bull run. But it can't simply go up forever, even no matter how many gimmicks and props you place under it. Let's look at another chart. This one is a ratio of total market cap of the stock market to US GDP. And you can see it peaked out in 2000, just prior to the tech bubble popping. It rose again, and then in 2008, and obviously the GFC crashed the stock market cap way down to almost 50% of US GDP. And now we are at all-time highs in terms of ratio of total market cap of the US stock market to US GDP. So really, how much higher can it go? if it is to go higher, it's going to set absolutely new records. It's decoupling from the real economy. And even the GDP, you can argue that a lot of debt is creating the GDP growth. The US government used debt to create government programs that go toward GDP. You know, the US are going into debt at least $1 trillion per year. That's being added to their overall national debt. I think it's nearly at $23 trillion right now. That's unsustainable, of course. So I don't see how much higher the stock market can go. And I think there's a great myth here where people say you cannot time the market. You know, timing the market is better than timing the market. And that can be true in many situations, but I think in this very specific situation, it's better to be on the sidelines in cash than be in the market right now. Because if you're going to go in the market right now, you're betting that the stock market is just going to break all the rules. And it's just going to, like, the upside is just going to continue. From where I'm sitting, there's a minimal amount of upside and there's a huge amount of downside. So, you know, Warren Buffett, he's in cash a lot right now. A lot of people are moving to gold, cash, you know, other asset classes other than equities, because they can read charts just like the ones I'm showing you. I'll leave it there, but if you've got any comments, please comment down below, and see you in the next video.